Hi, and welcome to the recording for the first part of the syllabus and Chapter 1. Chapter 1 deals primarily with the theoretical aspects of an assurance engagement, and one of the things that will become apparent during the course of these recordings and your studies for the A&A paper is the technical content that underpins the syllabus. The audit and assurance paper is not a paper that you can guess a part of the answers or maybe apply a common sense approach to throughout the syllabus. There are lots of theoretical concepts and lots of concepts that have technical descriptions which are required to be learnt. So we'll begin with the first part of the syllabus and Chapter 1, which starts off with the theoretical aspects of the concepts of assurance. Now, what you'll see is for this first part of the syllabus is that actually there are lots of different categories of assurance engagements. However, the primary type of assurance engagement, and indeed the part that the exam focuses primarily on, will be that of a statutory or external audit. Now, the main objective of this external audit, which is usually driven by the requirements under the legislation for a particular jurisdiction or country, contain these things. First of all, the auditor's requirement is to provide an opinion, and that opinion must state whether the financial statements which are the subject of the audit do reflect a true and fair view. Now, some of these concepts will be explained in much greater detail as we progress through, and particularly for this first session, we'll explain the concept of truth and fairness in slightly more depth. But for now, primarily our main objective when we perform the role of an external or statutory auditor is to make sure that we arrive at an opinion that says whether the client's accounts are true and fair. Now, once again, you will see different types of assurance engagements. The primary assurance engagement, the one that features most commonly in the exam, will be that of the statutory audit. So typically a client will have their year end. Those accounts prepared for that year end will then be subject to a statutory audit. In other words, where the external auditors come in and provide, as we previously described, an opinion that says whether those accounts are true and fair. However, what the syllabus then does, it goes on to explain that there will be benefits from obtaining assurance from an independent party like the assurance or audit firm over other areas of a business, and indeed not necessarily always the year-end accounts. So we look at some of the primary examples that you're likely to face in the exam. It may be that a full audit is not a requirement under statute, and yet there will still be a benefit of a smaller businesses undergoing some kind of external scrutiny of their accounts. So that kind of scrutiny we'd call a review. So there will be an assurance engagement that is not a full-blown statutory audit, but it's like a mini version or a diluted approach to the audit, which we'll call a review of their accounts rather than a full-blown assurance engagement required by statute. Other businesses that are yet even to be incorporated may have a requirement for a business plan, and that business plan may need to be subject to independent scrutiny and assurance provided with regard to the content of the business plan. Those business plans often include what we call prospective financial information. So the abbreviation here, PFI, relates to prospective rather than historic financial information, and typically you and I would probably refer to these prospective financial reports as budgets or forecasts. So before a business even incorporates, there might be a requirement for budgets and forecasts, and there will similarly be a requirement for those budgets and forecasts to be independently reviewed to make sure that the business is planned on a sound basis. Also, the increased use, even of smaller businesses, of their computer or information technology systems. IT systems are key for most businesses, and there will be an increasing requirement that lends itself to another kind of assurance engagement for audit firms, known as the provision of assurance concerning things like the reliability of a business's IT systems. So we recognise that whilst primarily there will be a need for a statutory audit, the externals come in, they apply their work, their concepts to the year-end accounts. What we now ask you to appreciate that there will be an additional requirement for other types of assurance engagements of the ones that we've mentioned, things like reviews, mini audits, business plan assurance, so budgets, forecasts, undergoing scrutiny by an independent party like the assurance engagement firm, and then IT systems, having the systems reviewed to see whether they are working effectively and reliably. One of the things that you'll see as a student of the audit and assurance paper is that we'll often use abbreviations. So already we've started to introduce concepts like truth and fairness that can be abbreviated down to T and F. Wherever we use the abbreviations in the slides, those abbreviations can reasonably be assumed to be abbreviations which will be accepted in your exam when you're typing out your answers. So from here on in, we'll start to see an increasing awareness of your need to recognise where abbreviations will be accepted. So things like AA for the audit and assurance paper is fine, T and F for truth and fairness, but we're going to introduce another one with this slide when we discuss agency and stewardship. Now, one thing that you'll find as a pattern and trend is that as you progress through your ACCA studies, some of the smaller entities that maybe you dealt with, maybe the FA1, FA2, also the F1, F2, F3 papers, so the lower levels of your studies typically will involve your knowledge and involvement with smaller entities, things like sole traders, things like partnerships. Now, as you progress through your studies to the point that you're at the moment, you'll start to see those smaller types of businesses vanish. Those smaller types of businesses will be replaced for papers like the AA paper with incorporated rather than unincorporated organisations, and also some larger incorporated entities, so things like your publicly listed businesses or PLCs, as they can from here on in be referred to. Now, wherever you've got those kinds of organisations, you'll see that the owners will not usually be those that perform day-to-day activities or management roles. Where you have private, and certainly larger private and public limited companies and listed companies, those kind of businesses will result in a structure which sees separation between the owners and those charged with day-to-day responsibilities. Now, that separation often referred to as almost like a divorce of ownership, and for us it results in the agency theory or the agency concept. So now we recognise that the day-to-day responsibilities performed by managers and directors and often employees who are no more than agents operating on behalf of the owners. So we will have owners of an organisation who are not those charged with day-to-day responsibilities. That creates agents operating on behalf of those owners. Now, one of the things that results from that relationship, from that structure, will be the potential for misuse or abuse of the responsibilities and powers that those managers and directors and agents have when performing the role for the owners. Now, as a result of that, it's particularly advantageous, it's particularly important that the roles of senior managers and directors, which from here on in you can refer to as those charged with governance, quite nice because you can now also abbreviate that to TCWG. So those charged with governance, now abbreviated down to TCWG, we recognise for this paper as being the senior management and the directors of the organisation who are the agents of the owners. So in order to make sure that those agents are not abusing or misusing their powers, there should be oversight of those roles, and this oversight primarily provided by the audit and assurance firm through the year-end or statutory audit, or indeed, as we've seen, through other types of assurance engagement. Now, we've seen already that the primary objective, the main aim of the statutory audit, the external audit, remember abbreviations fine, external audit abbreviated down to EA, and we've seen earlier on that the primary objective of the statutory external audit is that of a requirement to provide an opinion that says whether the financial statements are true and fair. Now, we've also acknowledged that there are other types of assurance engagements. So when there are other types of assurance engagements, then the aims and objectives might not necessarily be exactly the same. So here, for example, using a previous IT systems assurance engagement, then one of the main objectives there would be to provide a user of our assurance that the IT systems are indeed working effectively, that they are reliable. So we need to recognise that where there are other types of assurance engagements, then the objectives may differ as well. Now, one of the nice things about the A&A paper that starts off right at the beginning of the syllabus is your recognition of the theoretical aspects that underpin the syllabus, which will be useful from here on in. So whilst there are different types of assurance engagements, regardless of the type, so whether or not it's the statutory external audit, whether or not it's a review assurance engagement, whether or not indeed it is a review of the systems or the IT systems of a business, all of those kinds of assurance engagements will have the 5 elements of assurance in column. So what we'll do is I'll walk you through the 5 elements, and then what I'll do, we'll pause, and then I'll walk you through again with other kinds of assurance engagements. So we'll walk through the main elements, then we'll walk you through for the statutory audit applied through these 5 elements, and then we'll walk you through again with another type of assurance engagement. Now here, the tripartite or 3 parties element of assurance engagement, usually the 3 parties involved will be what we call the party who are responsible for providing assurance. So one of those 3 parties will be the audit firm. That's the firm or the audit practitioner, as they'll often use as a reference for the audit firm, the practitioner or the audit firm. We're the party that provides assurance. So party 1, if you like, the party that provides assurance, that's the audit firm, that's the practitioner. We are the party that provides assurance. Now, a second party will be what we'll call the responsible party. In other words, the party responsible for providing information or reports upon which assurance is sought. Here, typically, in a statutory audit scenario, the audit firm, as one of the parties, the party providing assurance, will be given a set of financial statements from the responsible party. So the party responsible for preparing the accounts, the financial statements, that's normally those charged with governance. And you remember that abbreviation TCWG from the previous slides. That's the senior managers and directors. They are responsible for preparing the accounts. They are the responsible party. Now, the third party in this tripartite relationship, that's the party to whom assurance is given by the audit firm or the practitioner. So the party to whom we provide assurance, usually in the statutory audit scenario, that will be the owners. And remember from earlier on that where there's separation between ownership and day-to-day management responsibilities, it's quite nice for the owners to be given assurance, particularly when it comes to the financial records, that TCWG are preparing accounts that reflect a true and fair depiction of the performance and position of that business. So the 3 parties, again, the assurance firm, also known as the practitioner, the responsible party, also known as TCWG, and then the party to whom assurance is provided, that's the owners, also known, of course, as the shareholders. Now, the second element of an assurance engagement will be the subject matter. Once again, staying with the theme of the statutory audit, being the assurance engagement, broken down now into 5 elements, the subject matter will be the financial statements themselves. Next, the third element, what we call suitable criteria. In other words, suitable criteria by which we would evaluate the subject matter. Well, if you think about your earlier studies, particularly the financial reporting, paper and knowledge, you'll recognise that the subject matter, the accounts, the financial statements, are prepared in accordance with IAS and IFRS. So that will be the criteria against which the assurance firm or practitioner will gauge whether the subject matter has been prepared suitably, and therefore that is the criteria against which we will evaluate the subject matter. So, 3 parties: practitioner, the responsible party, and the shareholders. Then subject matter, the financial statements, and the suitable criteria, IAS and IFRS. Those are the accounting standards or the applicable accounting frameworks to see whether the subject matter of the accounts are in fact prepared as they should have been. Now, the 4th and 5th elements of an assurance engagement are coherently linked. We'll end up with some kind of conclusion or a report from the assurance firm or practitioner, but that will be driven by the evidence that we gather as part of our assurance engagement to make sure that we can provide an appropriate kind of conclusion or report. So for most of you who recognise that there is a conclusion of an audit, where the audit is a statutory audit, the external audit, that conclusion is normally the auditor's report. What we now recognise theoretically is that there must be enough evidence and evidence of the right type to make sure that we can provide an audit report or conclusion. So those are the 5 elements of an assurance engagement, and that's the perspective of assurance, where we focus primarily on the statutory audit or the external audit itself. Now, were we to do a similar assignment and walk again through those 5 elements of an assurance engagement, but with a different theme, you'll see that there will be similarities in the elements, but differences with the individual component parts. So now what we do with this slide, in conjunction with the previous slide, is we consider the types and levels of assurance for different types of assurance engagements, not just the statutory assurance engagement or the external audit. Now, where we do other kinds of assurance engagements, like the ones that we've mentioned so far, so that will be reviews, assurance on business plans or PFI reports, and assurance on IT systems. When we conclude, you'll see that the types and levels of assurance will differ. Now, the secret for this part of the syllabus and for the exam is to make sure that there is compatibility between the types and levels of assurance. If we just momentarily move ourselves back to the previous slide, where we have the element of assurance, when we do the statutory audit, folks, that is known as a reasonable assurance engagement. And when we do a reasonable assurance engagement, then that will result in a report or conclusion which is of the highest level. We will not, as you'll see later, provide absolute assurance, nor will we offer guarantees regarding the truth and fairness of our clients' accounts, but for a reasonable type of assurance engagement, that will provide the user, in this case the shareholder or owner, with a high level of assurance regarding, in this case, the financial statements and their truth and fairness. Now, one of the technical components that relinks to the 5th element of an assurance engagement is where this is the statutory audit, where we're giving reasonable, high assurance. The wording that we use in our conclusion or report will differ from that of the wording where we're not providing the same levels or types of assurance. So here, reasonable assurance engagement, like the statutory audit, results in high levels of assurance, not absolute guarantees. And the wording that we use within that report will be what we call positive wording. For now, we'll simply state that the accounts have been prepared in accordance with the applicable accounting frameworks and that they are true and fair. Really positive wording, and you'll see when we contrast that with other types of assurance engagements for the conclusions or reports that there will be a key difference with that wording and the wording for other kinds of assurance engagements. For now, reasonable assurance, high levels, positive wording. Now, when we do that again for another kind of assurance engagement, and if we take just one type, for example, a review engagement, and you'll recall that was almost like a mini or diluted version of the full-blown statutory audit, then that kind of assurance engagement needs less work. We don't perform the same levels of tests that we would for the statutory audit, in which case that kind of assurance engagement is one of limited assurance. Now, when we have limited assurance engagements, the level of assurance that we give technically is described as moderate, not high. So think of the statutory audit, remember again, as a reasonable assurance engagement where the level of assurance is high. Now contrast that with the other types of assurance engagements like the reviews, which are limited assurance engagements that result in moderate levels of assurance. And one further contrast that you'll see when we talk specifically about the wording at the conclusion or report stage is that we use negative rather than positive wording. Now, I should quite quickly add that when we talk about negative wording for another kind of assurance engagement, it doesn't have the same connotations as our everyday understanding of the word negative. Negative, normally, there's an assumption that there's something bad or not good associated with that word. Here, for our theory and our understanding of the levels of assurance, when it's not the statutory audit, it's a review engagement, so that's a limited assurance engagement. It results in moderate levels of assurance, and we'll use negative wording rather than positive wording. That's not to say that the outcome is not good or is not acceptable. It just means that the kind of wording that we use will be slightly different, and we will focus in much more specific detail on how that wording features later on the part of the syllabus and our studies during these recordings. We did mention earlier on that we'd explain the concept of truth and fairness in slightly more depth. So here we explain truth and fairness, remember, is the thing that we give our opinion on when we're providing an assurance engagement, which is the statutory or externally required audit. Now, the concepts of truth and fairness are slightly complex in as much as there's no one single acknowledged definition. So whilst there are lots of definitions that underpin the syllabus, truth and fairness is not one of those areas. We can go to a single definitive and provide the examiner with one line that describes that concept of truth and fairness. But we do know that those are the desirable qualities that the accounts are trying to reflect. The accounts should be true and fair. So our role here as auditors, when we're doing the statutory audit, is to recognise that whilst there isn't a single definition, there will be factors that contribute towards truth and fairness. So therefore, when we're giving our opinion is on these contributing factors to truth and fairness rather than an absolute definition. So those things that we now need to look at is whether the accounts, the financial statements, have been prepared in accordance with, here in particular, the legislative and regulatory requirements which underpin those accounts. So for example, lots of Companies Acts for multiple jurisdictions will dictate things like the format of the accounts. So have those accounts been prepared in accordance with those legislative requirements for things like the format of the accounts. Also, we need to consider whether the accounts have been prepared in accordance with the applicable accounting framework or those generally acceptable accounting practices and principles. Now, usually the accounting frameworks that we'll consider to see whether the accounts have been prepared in accordance with them are things like the IAS, the International Accounting Standards, and IFRS, the International Financial Reporting Standards, so long as the accounts have been prepared in accordance with, for example, IAS and IFRS, then usually as auditors we can conclude that the accounts look like they could be truth and fair. Now, they are two of the things that we would look for as accountants and auditors to make sure that the accounts are true and fair. Those are the contributing factors that the statutory auditor would look to make sure are in place before we can give our opinion that says whether those accounts are true and fair. There will be other things that you will need to consider as an assurance provider or as a statutory auditor, and that is whether or not indeed the accounts are prepared on a consistent basis. So the accounts should also be prepared in accordance with a consistent requirements. And you'll remember, of course, from your accounting studies, things like IAS 1 and IAS 8 dictate the need for consistency, and where there is a lack of comparability from things like a change in accounting policy, then of course the prior year comparatives would need to be restated. That should provide consistency. That is a contributing factor that we'll need to consider as statutory auditors or auditors over the accounts at the year end. That's the external audit. That's truth and fairness. The concept will underpin a lot of what we do, but those are the primarily most significant contributing factors that the assurance firm, the practitioner, will need to consider when we're providing our opinion on those accounts. Those are the theoretical aspects of chapter 1. Thankfully, you'll see that later chapters aren't necessarily as theoretically driven, so we will work towards more practical aspects of the syllabus and content of the A&A materials. For now, the summary for chapter 1 is that you should have recognised that there will be more than one kind of assurance engagement, that there are levels and types of assurance that result from those different types of assurance engagements, and regardless of whether we're doing the statutory audits or other kinds of assurance engagements like reviews or business plans or PFI reporting or indeed IT systems, all assurance engagements will have those 5 elements. So the tripartite relationship or 3 parties involved, subject matter, suitable criteria to evaluate the subject matter, evidence, and a conclusion or some kind of report. And lastly, a recognition that whilst there are multiple kinds of assurance engagements, primarily for this syllabus, the biggest part of the exam will always be on the external audit, abbreviated here to EA, in other words, the statutory audit assurance engagement. And that concludes chapter 1.